Live. I think we got a bit of feedback on your side, Stephanie, and we're live. And thank you very much for joining us this morning on the Friday edition, the futuristic Friday edition of Behind the Markets on Money FM. I'm your host, Munyuma Mutwale. We'll be waiting for our co-host, Stephanie, and I wish you all a very, very, very good morning as we hit the live button and I go what we call Tireless Fridays. In order to go through today's futuristic Friday conversation, where we'll be talking all things fintech. And the question of today for everybody will be, do you think fintech is the future of African growth? And good morning to you, Stephanie, and how are you doing?
I'm fine, Munyumba. How are you?
I'm fine, thank you, and welcome to everybody who's joining us on Facebook, everybody who's joining us on air, everybody who's joining us on Twitter, LinkedIn, on all of our platforms. Please feel free to throw us a question today, throw us anything you'd like, and also, what is it about fintech today? Today we're going to be discussing all things fintech, but before we do that, let's get into the market roundup into Futuristic Friday. What are we seeing yesterday? Yesterday, we saw the FX market drop a little bit, especially as there was a bond auction. We're starting to see a little bit of international activity happening in our bond auction, thanks to the fact that Moody's has upgraded local government securities for Zambia from CA3 to CA, meaning we are more of a stable outlook, especially after the government securities were excluded from the debt deal. So that has actually improved our outlook of our government securities, and therefore you're probably going to start seeing a lot more offshore interaction in there. But there is still a deficit in our FX market that is driving the fact that it is not yet recovering. So therefore, we're still at about 8.04% up a year to date on the dollar itself. Yesterday, we saw the stock market come down a little bit as Chilanga Cement dropped a little bit. So therefore, stock market index moved down by 0.92%, but still up 18.5% year to date. Bond index up 0.06% and up 0.84% in dollars, as we saw offshore participation start to buy up bonds yesterday with a little bit of a strong dollar yesterday. A strong kwacha yesterday, and interest rates dropped a little bit again yesterday. So we did also see the rand push up in the opposite direction by 0.65%. So rand to kwacha still at parity, effectively at 1.0283, up 1.59% on the week, but still down 3.64% on the month and down 3.72% year to date. So we are still getting that volatility sitting in the rand, while the dollar seems to be moving at least in a singular direction, 8% up year to date, 2% up on the month, 2% on the week, and down 0.2% on the down 0.2% yesterday. Simultaneously, as we go into the bond market, we did see that bonds up 16.95% on the secondary market, up 0.06%, and bond index is up 0.84%. In dollars, and up 8.83% year to date for Zambians who are investing offshore and looking to hold their portfolios abroad. Wow, we are seeing that government bond yields are down 0.003%, pushing interest rates down a little bit. But remember, there was those huge spike up that we saw just towards the end of July that pushed interest rates, and now we're sitting at 0.86% up year to date, meaning on the year we have had selling, but we're still seeing some sort of pressure pushing back downwards. Now, in terms of the commodities market, we are seeing that copper bounced back up yesterday on negative news about Caldeco. We'll cover that later today. Caldeco, the major copper supplier, while also the Chinese central bank is also looking at slashing interest rates to provide stimulus that will probably hit the property sector and therefore push copper demand up. So we're seeing global copper demand up 0.8% on the price, but still down 2.21% on the month and 0.67% on the week. Oil also up 0.53%, also on news of Chinese stimulus potentially coming in. Oil is up 5.01% on the month, but down 3.43% on the week, and still down 2.42% on the year. While gold went down a little bit by 0.3%, 0.033% yesterday. Now, in terms of the pump price that we're expecting, we're looking at our midterm review. This is our expected Zambian pump price by the end of this month, as it is the 18th, so therefore we can now start looking at our outlooks going forward. We're expecting the pump price to move up from 25.57 to 27.40, or 1.83 kwacha movement up, or a 7.15% movement up, mainly because Brent prices are up 5.93%, and the kwacha has weakened by 3.21% in comparison to last month. This is based, obviously, our our expectations calculation is based on obviously where the end price was, an assumed cost plus formula by ERB, which we have actually been using, the continuation of the cost plus formula, and also the basis of the assumed pump price moving average by probably 21st August to about 21st of the month all the way to about 25th. That's when we think ERB actually sits down and does the calculations. And the models used are based on FX, which we collect from BOZ, and Brent, which we collect from the global prices. So this gives us an outlook that we are probably looking towards somewhere around 27.40 as to where the pump price is expected to be, should we not see any reversals in the currency or any reversals in oil prices. Currently, the elevation of both is leading us to get back to 27%, and we're probably going to see transport inflation kicking back in the second half of the year, or at least at least heading towards the fourth quarter of the year. So, people, that is the expected pump price that we're putting out there. We do it objectively. We don't give you sides on it. Wealth insurance assets. Bitcoin yesterday did push down in Kwacha by 4.6% due to a 4% collapse in the dollar price of Bitcoin. Also a 5% collapse in the dollar price of Ethereum pushed both of their prices down. You can see this is why I keep saying these are highly volatile assets. So whenever we say yes, it performed 81.16%, but it can also lose 4.6% in one day and lose 5% in one day. So if you want BP from these things, by all means, put all your wealth in there. But my advice to people is always look at 5%. Ray Dalio says, look, put 2 to 5% of your wealth into things like Bitcoin and Ethereum, because that's what helps diversify your portfolio. But do not go all out because they're highly volatile. So always keep highly volatile assets to minimal amounts while keeping the stable assets to larger amounts, and therefore balance your portfolio according to risk. The mistake everyone makes is they try to put most of what looks like it's growing fast, but put most of what looks like it's growing steady. Remember last time we asked the question, what's more important, stability or fast growth? And a lot more people seem to understand that stability is what builds wealth. It's stability and consistency that builds wealth more than speed. That's why one of the statements I've said constantly, Stephanie, is rhythm is better than pace. Okay? The constant rhythm that you keep moving at is more important than the speed you try to move at. Right. Other things that we saw in the market. Also, here's our broad asset market outlook. Bonds are 17% up year to date, while the stock market is up 18.5% year to date. US dollars are up 8% year to date, and gold is up 13.5% year to date. Remember that at this point, we have about almost an 8% year to date inflation. So that's why you can see that the red bar represents what we call the real returns. Okay, so the bond market is up 8.4% adjusted for inflation. Stocks up 9.9% adjusted for inflation. Gold's up 5% adjusted for inflation. And Bitcoin is up 72.6% adjusted for inflation. Ethereum 47.7%. But remember, all this happened in the first quarter. When you look at the second quarter, this is what you're seeing. And in the third quarter, this is what you're seeing. This is what's been happening in the last quarter and so far in this one. Bonds are up 3.19% in this quarter so far, from 7.6% where they were last quarter. Stocks are up 5.5% higher than they were in the previous quarter. Dollar is up 11.16%. Gold is up 10.6% based on the rising of the dollar. But look at Bitcoin, gold, look at Bitcoin and Ethereum. Both down. Both are only as low as 1.18% and 0.46%, meaning that if you remove the dollar effects, these things are in the negative as they were in the last quarter. So that's why I said stability, rhythm is more important than pace. So always look at what is consistently growing, not just what grew once. Okay? Now, if you look at the four horsemen in terms of our calculation, what we've seen is inflation has shown good tailwinds. Business confidence in South Africa is up. That's good because that means production will continue going up, and therefore prices of things coming in from South Africa, which is our number one trade partner in terms of imports, that will mean that things flowing in from South Africa will come in a little bit cheaper versus the exchange rate that we're seeing right now. The IP inflation index, where we get our beef from in Brazil, shows that inflation is pushing down by 0.1%. National core inflation has stayed the same in Japan, and CPI has also stayed the same in Japan. While Rwanda rose its repo rate yesterday from 7% to 7.5%. Interest rates have also remained elevated in the 4-week and 8-week auctions happening in America. So interest rates are still high. Income statistics are showing that trade balance in Europe is strong, meaning the European export sector is actually starting to pick back up. Jobless claims in America have risen from 1.6 million to 1.7 million, showing that there's still a little bit of pressure in the unemployment sector of America, while initial jobless claims did come down from 250,000 to 239,000, while we're seeing the Philly CapEx index and the Philly employment index both showing negative numbers, showing that the American economy, though recovering, is starting to show a little bit of strength, but it still has weak spots. Philly manufacturing index also showing that we are seeing better industrial data coming out of America. This is why I'm saying there seems to be a recovery in America, but there seems to be a lot of weakness in China. So we're having a West-heavy recovery right now. Trade strong in Europe. In economic indicators like sales data, inflation coming down, industrial data coming out of America shows that the American economy is actually coming out of this a lot stronger than the Chinese economy, which is hamstrung by its property sector. Now let's get into some deep dives, Stephanie, before we get into our big conversation. Last week we didn't capture the story, but here it is. Moody's on the 10th of August 2023 upgraded Zambia's local currency long-term issuer rating to CAA3 from CA with a stable outlook. The upgrade follows the announcement that an agreement on a comprehensive debt treatment between Zambia's government and official creditors, explicitly excluding local currency debt from the restructuring treatment, reducing the risk of losses from local currency creditors, including non-resident investors. So in other words, there were no haircuts that were going to be now talked about for offshore investors who hold local government bonds. Therefore, the rating and the risk, the biggest risk that was being added to them, is gone. Now they want to start reinvesting in local government bonds. So therefore, we're going to see now, there's a bond auction happening today. We're going to see now if a lot more offshore investors are going to continue playing in that space. And if they do, that's eventually going to start putting pressure to push downwards on interest rates. But it should first signal some strength in the FX market. Now, the problem that might circumvent the kwacha getting too strong and even getting to points like 17 is that fertilizer prices are up. That's one problem that we're facing. Copper prices are still not as strong. So therefore, and also copper output. Copper output is still weak. Copper prices still not as strong. That's leading to lower taxes collected by the government, especially royalties coming in from the mining sector, which is only expected to really boom in about 2025. So when you've got high fertilizer prices, and then you've also got elevated oil prices globally, still trading above 80, putting pressure on our currency as well. And there's also a backlog of a lot of people who've been trying to do imports. And this year, towards the end of the year, you get a lot of people who are buying their inputs from their South African providers using dollars. And they are often trying to buy heavily, especially when we get towards the December season. So somewhere around October, November, you're going to see a lot of pressure building on the FX rate, because the manufacturers who get their inputs from South African suppliers, or the retailers and wholesalers who get their inputs from South African suppliers, one, they have to clear their credit balances with their suppliers, and two, they've got a lot of shopping to do because they have to then supply the nation for the December season. So December shopping, things like clearing out for Black Friday, for Christmas season, all those things, they often have to make sure they've cleared their credit and they've paid and they've bought their goods. So that's why we often see that rundown of our currency going there. Sorry, Stephanie, I don't know if you have a question.
Maybe just to throw the ball to people that do have a question on the other side. It's 077-1616-290. Now, the number to call to comment as well as ask a question is 077-1616-290.
Thank you very much. And to anyone who has one, please continue coming in. Copper, as we saw yesterday, has been buoyed a little bit. We saw copper prices going up, buoyed a little bit by the fact that China stimulus hopes, but weekly losses are on tap. Prices rebounded from a 2-month low or an 8-week low, like we reported yesterday on Thursday, after Chinese central bank vowed to release more liquidity to support the slowing economic recovery. The People's Bank is now widely expected to cut its loan rates even further on Monday. So we'll be looking out for Chinese interest rates cuts on Monday, but it is priced currently into copper. And Chile's Caldeco is at risk of insolvency. This is one of the biggest opportunities for Zambian copper prices to go up, because Caldeco is one of the biggest suppliers of copper on the market. Remember, Chile exports 25% of the world, is responsible for 25% of the world's global copper trade. And if it starts to suffer in its biggest mine, then this is an issue. Caldeco is 28% of Chile's total output. So 28% basically. This one mine is 6% of the world's traded copper. Now, debt is likely to rise at Caldeco to $30 billion by 2030 from $18 billion that it is now. It's currently sustainable, but it's at risk of becoming unsustainable by 2030. So Caldeco needs to revive its production from a 25-year low. Debt levels could reach such high levels that it will drag the company into insolvency, endangering its financial viability and therefore pulling down its capacity to produce. Caldeco's production in the first half of the year has been 633,000 metric tons of copper, the lowest in 25 years. And over the past 5 years, Caldeco's production has dropped 17% and is continued to keep dropping until 2025. Okay, that's a very important signal, because if Chile cannot produce copper, it increases the value of copper that is being produced in other countries like Zambia. And that is why, and also remember, what's happening in South America is the quality of the ore that's coming out of South America is also declining. So you've got declines in the quality of the ore, you've got declines in the quantity of copper. So therefore, it's the purity of ore that you find in Zambia and DRC, which is going to lead to more investment and more demand from those areas, and that's what will boost. So look at about 2025 to start to see when the copper deficits will start to kick in, especially because of South American issues. Now, Caldeco desperately needs investment, but the problem is the socialist policies that are being put in by Gabriel Boric are deterring investors. Increased taxes, more hostility. Guess what? It will pay back down. The problem that we often have, Stephanie, with the tax the rich gang, that's what I call them, is that they often forget that the rich are the ones who hire you. So if you have animosity towards the rich and you think the rich are your biggest problem, remember, what would life be like, Stephanie, without your job? No matter how stressful life is with the cost of living, think about this. How much more stressful is life? What's more stressful, Stephanie? And I'll ask this question to anybody. What's more stressful? Unemployment or inflation? What's your answer?
What's more stressful, unemployment or inflation? Both.
It said more. They can't be more than each other. What's more stressful between unemployment and inflation?
For me, I think I'd go with unemployment.
And this is what I keep telling people. The number one issue that you have to always remember is the first thing you need is money coming in. I know that it may not be enough. Inflation is a problem of money not being enough. But what's worse, Stephanie, not having enough or not having it coming in?
Yeah.
Okay. So I'm actually gonna point that question out to people. What's more stressful, unemployment or inflation? Please give out the number to the people again so they know who to call to. Stephanie, please go ahead.
077-1616-290. 077-1616-290. What is more stressful? Unemployment? I think with more employment, for me, inflation, then you actually see the rate of inflation stabilizing, because then we'll have a lot of people producing goods, people get into business. But of course, we want to know from you, what is more stressful actually between unemployment or inflation?
Yeah. What would stress you more? The cost of, in fact, let me put this question in a different way. What would stress you more? The cost of things going up or losing your stream of income? Your job or your business? What would stress you more? Losing the cost of things you want to go up, or losing your stream of income? And yes, we all know theoretically we can debate, But what is it that when you go to sleep, you will stress more? What stresses you more? Money not coming in or too much money going out? What is more stressful for you? And that's the question. And that's why I always say, here's the thing most developing countries need to understand. A little bit of inflation is the cost of alleviating unemployment. We can't get past this. The farmers in Zambia want a proper price for their maize. The problem is this debate about maize is a lot of us stand on high horses and say, we are fighting for the poor. Are you willing to pay 200 kwacha for maize, for mealie meal, so that the poor who grow your maize can actually get that 200 kwacha price and have a decent life? Are you willing to do that? The answer is no. You're not. That's where the problem comes. So everyone pays lip service to this poverty alleviation story until it inconveniences them. Let me tell you something, Stephanie, I've always known. The true value of your ideology and what you truly believe in is tested when you are inconvenienced by it. Not when it's convenient to go on social media and say, Black Fist, this up, Black Square on social media, all that. It's easy to put all that stuff up. It's tough to pay the cost for a better country. So what you'll notice, whatever country you go to, even China has improved its poverty. It's gone from 90% poverty down to about 20% poverty. But guess what's also happened? The cost of living in China is up astronomically. Do you know that the most expensive place in the world to buy a house is Shanghai? It's more expensive than New York. It's more expensive than London. Shanghai is the most expensive place in the world to buy a house. Okay? So already it's telling you that the cost of housing in China is extremely expensive. But what China has done is push their income levels up. So they've understood very carefully that in order to alleviate unemployment and poverty, you have to accept inflation. Switzerland is one of the lowest unemployment rates in the world. They've got high labor force participation, high levels of entrepreneurship. But guess what they also have? The most expensive country to live in. Okay? Yes, prices don't rise up rapidly, but still Switzerland is one of the most expensive countries to live in. Most of these very developed countries are very expensive to live in. I deal with Zambian couples and people who live abroad. I look at their budgets when they look at now they live abroad and we go through it. And you know what I start to find? The cost of living where they are is extremely high compared to what it would be here in Zambia for the exact same quality of life. Okay, but they're still. Guess why are they leaving for countries, Stephanie, where the cost of living is 3-4 times more than it is in Zambia? Why? One answer: higher income. So truthfully, what people don't understand is no matter what we want to say, and I've thrown this question out to people, but say it: what would stress you more? The price of things going up, or losing your job? Before we get into the Futuristic Friday conversation for today. And that basically rounds up that basically rounds up a lot of our information today. So the big question I'm going to ask today in our Futuristic Friday conversation, Stephanie, is: do you think fintech is the real future of growth in Africa and even Zambia? Do you think financial technology, things like mobile money, things like online payments, do you think financial technology is the real thing that's going to stimulate growth in Zambia? So we're really going to have a conversation today about what happens with financial technology, but I want to show you an example of what we call the Great China Leapfrog. Here's an extraction from a group called Vice, who looked at how China has leapfrogged through credit cards and has gone straight into mobile payments and has become one of the best fintechs stories. And it's similar to what Zambia and East Africa are actually doing. We're skipping banks and credit cards and going straight into mobile payments. So here's the story. Here's a clip from Vice.
User transactions on Taobao. In the early 2000s, Alibaba launched Alipay to facilitate user transactions on Taobao, the Chinese equivalent of eBay. Around the end of the decade, Taobao introduced its mobile wallet features. It let Alipay members transfer money to one another or split bills using QR codes. Good timing. That was right when the number of mobile users in China began to skyrocket.
One of the biggest reasons is the fact that smartphones in China are really cheap, and that's made the smartphone really affordable for the masses.
I don't think we have volume, Munyumba, on the other side.
In China's
with your
supercharged
video.
economy with more money in their bank accounts and
Okay.
began linking those accounts to Alipay.
Okay, so I think, Stephanie, it may be on your side, but I think on the mainstream. But I think we'll just pause it from there because unfortunately our radio audience may not be able to hear.
Not many Chinese people had credit cards. One factor, Chinese authorities made it difficult for Visa and MasterCard to get a foothold there. In 2013, Tencent got in on the action, bringing mobile payments to its wildly popular WeChat app. In just 3 years, the newcomer has grabbed up 40% of China's mobile payment transactions. This was the year before Apple announced Apple Pay, which, in terms of users, is now way behind its Chinese rivals.
With Apple adding payments into iMessage, that's out of the WeChat playbook.
So, just to our radio audience, what that does actually talk about is, one, we did see that China basically moved away from the whole banking movement and went straight to mobile phones. So in China's expansion, they just went straight into the mobile payments world and the mobile phone world, and they actually picked up from there. By the way, here's an answer to one of our questions earlier. Wale M. Kangwa says, I'm based in Switzerland, and what Munyumba is saying is very true. Switzerland is very, very expensive, but very stable. And this is the reality. Developed nations are very expensive. Thank you very much, Mr. Kangwa, for that. Yes, they are very expensive, but stable. So you will have to tolerate some inflation in the interim as you move people towards better prices for their goods. The great economist, the great economist Friedman actually said, the inflation is a funny story because everybody wants the things they buy to go down, but they want the things they sell to go up. You want the value of your time to go up, but you want the cost of your apples, bananas, maize, and all those things to come down. Okay, that is what everybody basically wants. We want the cost of the things we consume to go down, but Lord behold, we never want the cost of the things we produce and make money off to go down. If you sell tomatoes, you don't want the price of tomatoes going down. If you sell bread, you're not celebrating the price of bread going down. If you sell your time to your employer, you're not celebrating wages coming down. You're only celebrating when the things that you buy, other people make money off. So inflation, unfortunately, exposes the greed of humanity. If we all have to understand that we will all need to tolerate some medium-term inflation to see poverty in Zambia finally move down from the 80s and start to move to much better numbers like the 40s in the future and the 30s in the future, we are going to have to tolerate a gradual inflation of things because the people at the lower rungs of the economy want better prices for their produce because that is what will push them out of poverty. You want a higher salary, guess what? They want higher prices for their maize. That's the reality. So you're not the only one who's entitled to what you want. That is the reality of life. Now let's get into the fintech conversation in these last few minutes of today's Behind the Markets. So here's some of the data. We call it the Great Leapfrog, where Africa can actually leapfrog the Western banking system by moving from credit cards straight to payments and payment solutions. This was an interview done with Alfred F. Kelly Jr., who was the CEO and executive chairman of Visa from 2016 to 2023. He has a BA in Comsci, MBA from Iona University. He's worked for PepsiCo, the White House, American Express, Towerbrook Capital Partners, and Visa. And here's his conversation. 650 million Africans are projected by 2025 to have smartphones. By 2025, 650 million Africans are projected to have smartphones. This is thanks to the World Bank and African Development Bank who have looked at this. And then what we're also seeing is 78% of VC deals were done with technology-enabled companies in 2022. And 47% of the mega venture capital deals, which are $100 million or more, when done in fintech. So financial technology is actually very attractive. There were 12 mega deals in 2022 worth $1.84 billion. 6 fintech deals were amongst them with an approximate value of $840 million, according to the AVCA report. So if you're looking for an investable company or you're looking for an investable idea that you're trying to develop, it's the fintech world which is the most attractive to Africa. Now, if you're looking, here's the list of them, of the actual VC deals that did happen, the top ones. And you can see the fintech ones are Flutterwave, Yasser KuCoin, Interswitch, MFS Africa. Those are some of the biggest fintech deals. And you can see the biggest one was Flutterwave, $250 million in its Series D round. So you can see that this is where money is being raised. If you're looking at top verticals of technology-enabled companies, people are looking forward to investing in fintech businesses. So financial technology is actually looking like it's one of the places where a lot of business capital can flow into Zambia. So those people who are developing applications and ideas, it's really in fintech, commerce, education, clean tech, where you'll see a lot of people driving capital towards African countries. And this is where you become more attractive. In fact, if you look at even the AVCA data that we pulled up before, 2014 to 2020, we've seen that 23% of fintech deal volume came from fintech, 32% and 31% 2021 and 2022 shows that the majority, it's the biggest player of where money goes to. And if you're looking at even the amount of money, 60% of investment done in Africa in 2021 went into fintech deals. 42% in 2022 went into fintech deals. So you can see fintech is a leader by a large mile. Financial technology is a puller of capital into here. So it's about coming up with ideas. Now, in the conversation that was had with Mr. Kelly, he talked about Visa's expansion and investment plans into Africa, the vision of a cashless Africa, interoperability and domestic solutions, unequal payments development, fintech, investment requirements and risks, investment timelines that people need to use for Africa, and global trends affecting the growth of fintech. Now, he did say that Visa has been in Africa for about 50 years. They opened new innovation centers recently in Nairobi in 2022, and he says that they're now ready to put up about $1 billion of investment in 2023 to 2028, which will include fintech accelerators, and they're going to pick 40 startups to work with a year and then pick 13 of them to conduct capacity building and capital injection into them to grow them into businesses. So this is them pumping in about $1 billion to help that. The reason they know this is when they develop these little fintech startups, they end up connecting into the Visa ecosystem and pulling more business for them. Now, other things that Visa looks like they're planning on doing in Africa, they're talking about continued expansion into more markets and proliferation of global innovations, things that are working abroad, and also building collaborations and partnerships through things like working with fintech accelerators to help build out more small fintechs coming into Africa. The other news that they did have in this conversation was that why do they invest in Africa? They said Africa is the youngest population in the world. We actually have the first digital native generation. Africa has the first huge or quantity of people that were raised in social media, like Zambia. Zambia has a huge generation of people that were raised with smartphones, raised with social media, raised with phones. Actually, remember that 70% of the Zambian population are below the age of 40. If you're looking at even the youth, and I'm talking about the adult population, 70% of the Zambian adult population are below the age of 40. So already that tells you how youth-centric our audience is. And these people have grown up. They're people who grew up and went through high school with Facebook around. So we have the first young digital native generation. The infrastructure has improved. Africa has gone from 9% access to internet in 2009 to 40% access to internet in 2023. By 2025, as we said, there'll be 650 million smartphones. 500 million Africans will be projected to be shopping with e-commerce by 2025. And the Africa Continental Free Trade is going to turn this from a basically from national markets to a borderless economy in terms of the flow of goods. That is the vision. So that is making Africa a much more investable case. And if you looked at those top mega deals that were being invested in, it was mostly multi-regional deals that were attractive to most investors. Now, one of the things they're looking at is the push for a cashless Africa, the cashless society. Now, I know there's a lot of conspiracies about this, but I'm just going to give you the full idea here. Two-thirds of sub-Saharan Africa is without access to mainstream banking. Okay, so that's the upside of fintech. This is why mobile banking came into Zambia with such a boom. Only 20% of Zambians were banked. 20 to 22% of Zambians were banked. So there was this wide space for mobile money to come in and grow. And now we're up to 59% usage of mobile money, according to FinScope 2020. Africa is likely to leapfrog physical credit cards, just like China did, and go straight into a mobile-first approach. So fintech plus mobile is leading to the digitization of finance at a much more rapid rate. Now, one of the things that he brought up that was actually quite interesting is he said the rise of fintech is also helping tourism, because tourists don't want to carry cash. They would like to be free. And because we don't have much card infrastructure in our countries, the convertibility between cards and mobile wallets is actually something that would help tourism. So we need to make sure that when we are trying to encourage tourism, we're also giving our tourists a financial option to transfer some of their funds into a local mobile wallet, be it a mobile money wallet or whatever, so that they can easily transact and transfer inside the country, as opposed to maybe carrying their card, which they're not comfortable with, not being able to swipe with it, not being able to use it. If you're a tourist and you want to walk through a cultural market and maybe buy something, a card is useless to you, but every vendor at that cultural market has got mobile money. So being able to move some of funds into mobility will actually help enable more seamless tourism. So that's one of the experiences we have to also allow for that as well. Interoperability between currencies and domestic solutions is that many countries are building out domestic solutions. So one of the things the head of Visa was talking about is he said that there needs to be single players, or at least big players, that operate across jurisdictions. And that's why we've seen investability across multi-region investments in the AVCA report. Fiber, data, and cybersecurity need to be invested in heavily, because if we're going to start transacting more through mobile, through everything, fiber, data, and cybersecurity have to be there to protect and enable transactions. And we now need to see that equally as important, because the flow of money is equally as important as the flow of goods. Building a fiber line is equally as important, people, as building a road or a railway line. I say this because that enables the flow of transactions. So we must be able to equip also we need players that can help with cross-border payments. Yesterday I was dealing with a friend who we were talking to each other, was trying to make a payment for things to go across the border from Zambia to Botswana. These are issues, by the way, that people are having in terms of the move of goods and services. Cross-border payments are not as easy outside of the basic banking infrastructure in terms to take long. So we need to make sure that we have a better cross-border system. And also we need to have exchange rate harmonization and payment synchronization to make sure that we can flow. This is where the goods of players like Visa, or even local ones, if we have the Africa Development Bank and all these other institutions, Africa Exim Bank, all these ones coming in with solutions to help interconnect or create interoperability. By the way, this is why Africa really needs to think about central bank digital currencies. This will speed things up at an astronomical rate. Other things that we are seeing is that unfortunately, fintech development is unequal. It's connected to French West Africa, Egypt, Ghana, Nigeria, Kenya, Uganda, Morocco, Tanzania, and mostly Egypt, Kenya, Nigeria, and South Africa. And one of the things we found is that the governments are very supportive. One of the things that also helped with the expansion of mobile money in Zambia was that the government started to accept payments. You can pay your taxes with mobile money. You can pay RATSA with mobile money. You can pay rates with mobile money. You can pay everything now with mobile money, almost everything with mobile money specific to the government. So the government has led the way in saying, we will accept mobile money. We will transact with mobile money. Now, I know that there's the push, there's obviously the back and forth of it, but making sure social cash transfers are done with mobile money, making sure that anything to do with FISP payments are done with mobile money. If we connect as much of the government infrastructure towards mobile money, it then starts to push these things, or fintech solutions. So it's about developing fintech solutions that enable the government to really solve these problems. So government needs to start targeting fintech at local problems, and then government leads the way in fintech uptake. That helps stimulate a lot of those. So this is a role the government can play. But without the government, it still happened. But the role they played is they did accelerate it when the government bus connected a lot to mobile payments. You can see it even when we started accepting NAPSA payments with mobile money, and we even started talking about making NAPSA payments to some mobile money accounts. So you can see how important that was. So the prerequisite for a good environment for fintech to be investable into is a welcoming government and a welcoming regulatory framework. You must remember that infrastructure is really important. That's why I said investing in a fintech, investing in a fiber line is now equally as important as investing in a road. I would like us to start seeing fiber investment in our budgets a lot more. Similarly to how we're seeing road and railway and airport investment. The reason is that is going to enable a lot more people, because it says here 21 out of 25 of the least connected nations in the world are in Africa. 300 million Africans live 50 kilometers from a fiber or broadband endpoint. 300 million Africans are so far away from any fiber or broadband operability, it makes it difficult for them to accept, receive, and transact. So this is what we have to also fix. We also have to try to avoid coming in and the opportunity to also being too niche. Also to make the first investment. Sorry about that. Fintech investment also risks that will also have been highlighted is that each country is unique. So it must be treated uniquely. So there's idiosyncratic risks with each country. You must take a long-term approach. In the short term, African investments in fintechs, even if you're a fintech developer, if you're a business developer in this area, always remember in the short term, it's always hell on earth. But in the long term, that's where the payoff is. Remember that mobile money started in 2012, but it really only took off in 2018, 2019. That's when we really saw the takeoff. About 2017, 2018, that's when we really saw the takeoff of mobile money. There was a 5-year silent period when they were really digging their heels in and trying to sell it to people. Cybersecurity is an actual threat, regulatory risk. But in order for us to be able to scale, we must always remember that standards, value, and interoperability are very important. One of the things that has helped mobile money grow is its interoperability with cash, interoperability with all sorts of services. The ability to now move across is what has also helped things like mobile money grow. So if you are a young person building a fintech solution and trying to build the next fintech company, remember that you must deal it with good standards. It must be valuable to the user. You must adhere to standards, and you must have interoperability with other jurisdictions, other places, anything. It must be able to interact with many other things. And then what he was also stating was that if you want to invest in Africa, you have to spend about 5 years injecting, 10 years supporting and nurturing. Only about 15 years can you start to see the growth. So if you're not taking a 15-year investment in a fintech approach to Africa, then you are lying to yourself. So even in Zambia, to all of you people who are trying to get rich in 5 years or less, all the best to you. You are meant to be doing this in 15 years plus. And finally, he did say that things like deglobalization and data localization and what we call data nationalism or local or technological nationalism are serious problems. Data localization is actually something that's also happened in Zambia, where databases are being demanded to be held in Zambia. So therefore, data localization makes it very difficult for interoperable players like Visa and these ones who deal with cross-border payments to start assessing risks. And then it also hinders them from actually coming into your country because they need to now start building data centers in your country in order to be able to operate there. And that hinders them and increases their cost of doing business. Therefore, it now starts to exclude them from coming into your country. So be careful of excessive data localization. I know it's extremely important in the long run to have our information protected, but just be very careful if you want to start operating in a global world. So this is why digital currencies might be a strong suit as well. And payments need to be done in a constant spirit of collaboration. If you are going to build something in the fintech space, make sure you're building it in collaboration with people. And in the final statement, Mr. Kelly said, Africa is one of the most exciting and admired fintech ecosystems in the world, bringing outstanding entrepreneurial talent to a young digital-first population that is fast growing. Alfred F. Kelly Jr., CEO and Executive Chairman of Visa. So the question I throw out to you once again, and keep them in the comments alive, and we'll throw it out onto a question. Do you think fintech is the future of growth? Do you think mobile money and financial expansion It's the future of growth. Also look at it for your investment opportunities. Also look at it for growth opportunities, entrepreneurial. But this is then your futuristic Friday wind-up. We have lost Stephanie today, but I am Munyumba Mutwale. I am your financial analyst, investment analyst, your financial advisor, and your host of Behind the Markets. I wish you a wonderful day, a wonderful Friday. God bless. See you Monday.